Well, thank you for staying with us. This is ANN7 BizPulse with myself, Audrey Chimwanda. In our top story, the United States-based think tank Viceroy Research has slammed South African Reserve Bank for vouching for Capitec Bank without due diligence. The group had come up with a damning report against Capitec Bank last week, accusing it of underhanded business practices. Quickly jumping to Capitec's defense was the South African Reserve Bank issuing a statement saying that the bank meets all prudential requirements. Viceroy now says that SARB stacked its reputation on the accuracy of the company's accounts, but did not do enough to check the accuracy of the information provided to them. In its rebuttal, the Viceroy has referred the information contained in the most recent Capitec annual report, a document that it says is easily accessible to SARB. It says that SARB decided to take its reputation on the accuracy of Capitec's accounts. SARB has not yet performed an adequate regulatory inspection of Capitec. SARB has a responsibility to determine whether the information provided to them is accurate. They did not think that it is. SARB has a responsibility to perform a full regulatory inspection of Capitec. Viceroy remains firm in its belief that this will result in SARB placing Capitec into curatorship.
I think, the Reserve Bank should and must actually be able to review and actually, keep a much more closer eye in terms of the lending practices of the Capitec Bank. So it should actually do with other banks anyway. But it's just that the Capitec Bank, because of the proportion of its unsecured lending book, it becomes quite much more important. We dare not be, really, relax on the once such rumors have actually now come up.
What the real fears around Capitec is not so much as Capitec, it's the lack of trust that many investors have in our regulatory environment. It's unlikely that the FSB and the Reserve Bank are both being fooled by Capitec, but it comes just a few weeks after Steinhoff, in which our regulators were fooled by a very large company. No bank can afford more than a certain percentage of their customers to come and withdraw their money in a short period of time. And the Reserve Bank probably wanted to avoid that kind of panic out there as the first thing. So it's probably was wise on their part to make sure that they had a statement out very quickly to reassure clients of Capitec and to prevent any kind of panic by depositors.
The whistleblower group also quotes numbers and data from Capitec's latest annual report to emphasize the bank might be a loan shark cooking its books. Now, here are the arguments cited by the agency in reiterating its call to put Capitec under curatorship. I quote, delinquency rate implied by Capitec on their unsecured loans is below the serious delinquency rate in U.S. prime mortgages. Capitec claims in its loan pools they perform better than the best unsecured credit pools in developed countries. Capitec claims that not many of unsecured personal loans have been restructured or deferred. Viceroy has considerable anecdotal evidence that staff regularly roll these bank loans or restructure them so that no delinquency or losses are recorded. If Capitec's loans are not in fact better than American prime credit cards, then it is misrepresenting information to the markets and to SARB.
The last couple of days, you've seen significant falls followed by significant rises. So on Friday, the share wasn't doing that badly, and today it's down slightly. It isn't down dramatically. We're talking about a move at the moment of less than 5%. Remember, Viceroy didn't just say that the company was misrepresenting stuff in terms of its accounts. It was also saying that some of the practices it was doing was also wrong. So there's two aspects to it. One is the accounts, and the other part is the actual practices of the way they do business. And I think both those things need to be considered when you look at Capitec's value.
Capitec has once again denied any wrongdoing on their part. In a detailed point-by-point rebuttal, it says, and I quote, the Viceroy report presents information that is not clearly comparable. The report creates false impression that Capitec's arrears rate is understated compared to two other credit providers mentioned. Our loan book reconciles, and we deny any misrepresentation of the loan book. There is no overstatement and that no adjustment is required. We deny the accusation that we roll unpaid loans. Now, joining me in studio to unpack this further and try to get to the bottom of this back and forth with Viceroy and Capitec Bank is Lowe, that's the Free Market Foundation, from Free Market Foundation. Also, Mr. Hardiman, political analyst, is in studio. Gentlemen, welcome to BizPulse.
It's good to be with you and the viewers.
Right, I'll start with you, Leon. What do you make of this back and forth? You know, the rebuttal from Capitec, Viceroy confidence in their stance that there's some cooking of books that is happening with Capitec, and why hasn't anyone else found this evidence that Viceroy seems to only have?
3 points. Firstly, Viceroy doesn't have anything special. It's all on the website. It's all public knowledge. Viceroy is doing what everyone who looks at the market does. It's looked at the numbers and decided that Capitec isn't worth, or its book isn't worth as much as it says. That it's actually got loans that are going to not be paid or met and will have to be written off. And the regulatory agencies, why didn't they do anything? Because in their view, and they examine Capitec's books every month, our Reserve Bank, the Treasury and other people like the National Credit Regulator keep a close watch on them all the time, and in their view there was nothing to raise the alarm about. However, having said that, let me make the point that this is what has got to happen, is you want people like Viceroy to blow the whistle when something goes wrong, but you also want them to blow the whistle when it's legitimate. And I'm not saying there's something wrong with wanting to make money on short selling, but let's understand what they do. What they do is they sell shares they don't have. Then they cause alarm. It's like shouting fire in a crowded theatre. Then when there's a stampede because they shouted fire in the crowded theatre, they cause an alarm, they buy in the shares.
Right.
I have a suspicion that the reason they are now so desperate to get at the Reserve Bank is because they failed to sell in time and the shares recovered. The shares have had a spectacular rise over the last...
They recovered quite quickly, actually,
Quite quickly. Yes. And so analysts, the Treasury... Well, actually, as one analyst said, one of the top analysts, Mr. Gilmore, that he was surprised there wasn't a run on the bank. That kind of information can be very dangerous. And if there's a run on the bank, it has very serious implications for the economy. And that is why the Treasury and the Reserve Bank and the Financial Services Board and others are very quick to want to say, don't panic, everything's fine. Of course they'll say that.
But was everything fine, though? Will the South African Reserve Bank just jump onto the wagon and, you know, make sure that they protect the image of the country? Sorry, of course, the financial sector, Mr. Hardiman.
Yeah, I think the first question must be, well, what is Capitec? Is it a classic bank or is it a hybrid? It is actually a hybrid between a classic bank and a micro lender. So when you look at the banking, in fact, the deposit-taking operations of Capitec, of course, the Reserve Bank and the Registrar of Banks will have full oversight in terms of how that is happening. After all, whatever the depositors are, funds that are held by Capitec in trust, in terms of the deposits, those are fully covered in terms of the deposit that in any case Capitec would have had to give to the Reserve Bank to ensure that in case there's a run on the bank, the money is there.
Right.
I think what is at question here, and this relates more to the shareholders more than the depositors into Capitec, that the shareholders who have been buying the shares either through, whichever means that Capitec has been raising money, in turn on lending that money in the micro-lending space of Capitec, that's really the issues where they are being raised. Now we have to be saying, how can it be? My view is that, Capitec is a classic case that reminds us that success is a lousy teacher because it always seduces smart people into thinking they cannot lose and that they can defy gravity. And that's really what we have seen Capitec really in terms of its announcements of its results, that forget African Bank. We know that Reserve Bank equally came out and said there was nothing wrong with African Bank, only to have to bail them out with 11 billion rand not long from then. And then African Bank had to now be effectively restructured into a good bank and a bad bank and all of that. But the Reserve Bank had to come to the party with 11 billion rand. Now, if we look in the case of Capitec now, they are saying the same thing. What diligence have they done? They haven't specifically disproved or rebutted with substantive evidence the issues that Viceroy Research have raised. And what are those issues? Capitec is within an economy that we know, as a matter of fact, that it is in perpetual decline. Effectively, our economy is moribund. It's not going anywhere. And at the same time, we've got increased unemployment. And the typical borrower of Capitec is somebody who is in that vulnerable employment space where already because of the state of the economy, the consumer is already overextended. But a chief source of the problems of Capitec will be that there's been an allegation that it was Absa Bank actually that lobbied successfully for the increase of usury, whereby you can charge higher than the regulated interest on the loans. And that is really the chief source of the delinquencies, the inability for that overstretched consumer to be able to service their debt or the money they would have borrowed from Capitec. And hence we are seeing the refinancing that they are talking about, or the credit facility, multi-credit facility that they are talking about. That is as a result of that consumer now not able to pay, because in certain instances you find that the borrower would be paying in excess of 30% per annum on that money that they
And that's quite a bit. I want us to come back to that point.
That is the chief source of the problem.
And I'm glad you've answered the question of who Capitec is and, you know, why all this attention is on Capitec. But who's Viceroy? You know, are they a credible research firm? And if they can, you know, raise such an alarm, you know, that affects the market share of, you know, a bank, and, you know, people will come and buy, and, you know, all that drama that happened there. Should we even listen to them? And if their concerns were genuine, shouldn't they have gone to SARB first and given them the evidence to say this is what we're worried about, or was this deliberate on their part?
No, they're predatory.
Okay.
That is what they want to do. They don't want to first go to the regulator.
Okay.
They want to cause panic, and then they want to make money on the slide. And you can do it the other way around. You can be a Pollyanna and say that some company is undervalued. You've bought the shares in advance and you sell them on the rise. But let's just be very clear about who they are. Nobody knows. Virtually little is known about them. They're three young men or one young man. There's no substance, no gravitas, no size to this business. Who's behind them is a more interesting question. Who's doing the short selling and making the money? They don't appear to be doing it in their own name. And then let's also understand, if I just want to add to Capitec, I think that was correctly described, but let's make this point, is that it is in the space that we want somebody to be. Everyone keeps saying there should be access to credit for historically disadvantaged, vulnerable, the poor. That's what Capitec does. Now, obviously, that's highly risky. Small loans have high administration costs, they're highly risky, so you charge more. So we can regard Capitec, in my view, as a kind of hero running to the aid of the poor. At the same time, you don't want the poor to have reckless credit extended, and that's the National Credit Regulator's job. That's what they do. They watch to see that Capitec doesn't extend credit recklessly. But everyone, I presume, every decent person wants finance to be available to poor people and not just to rich people, and that's the area Capitec occupies.
So what are the consequences going forward, Mr. Hardiman, for Viceroy? I mean, if they can cause such alarm and manipulate the share market price, and, you know, they come with their report and they cause, you know, a big hula baloo and they disappear.
No, I think what is a lesson for all companies that are listed on the JSE that are having shares trading? Take maybe this analogy. You have a house with the latest gadgets, but you don't have a fence, electric fence, barbed wire, and a bulldog, and an alarm system to a security company. That's what every company that's listed on the JSE at all material times they have to be aware of. That when you've got conditions of short selling, there must be somebody at the door to ensure that nobody can short your stock. Because that is a practice that happens all over the world where they short your stock. And simply put, that if you haven't built those safety measures, as it says, like having a house with the latest gadgets but without a barbed wire fence and all of that, that's really what the lesson is, I think, for corporate companies. Because now, as the JSE, we know that there is a great deal of interest even of foreign buyers that are participating on our stock market. So that is a lesson, I think, for the future, not just for Capitec. But Capitec itself, I think they cannot run away from having to answer the hard questions. The consumer in this country, we are told that the consumer debt is 1.6 trillion rand plus. We've got high unemployment, and it means that those people are overstretched, and therefore the events of default are going to be on an increase. And I think that it was only a matter of when, not a matter of if, that we will see Capitec itself falling, you know, into exactly the same problems that we've seen other micro lenders. Blue Financial Services, I think they had to close their, shut their doors, and everybody else is hard pressed. So at some point in time, it was not possible that they continue to report the levels of growth in terms of earnings, whereas other micro-lenders were having a challenge. Now the question is, with this report having come out, with the questions that have been asked, not yet answered, will Capitec be able to attract additional capital to be able to continue to have a pool of cash to advance in loans, because their business is to effectively trade or sell money? Will they be able to continue trading, selling money to the consumer who is hard-pressed? And also, will they revise the interest rate that they charge on those loans, particularly even on smaller loans, and bring it to within affordability levels? Because the higher the interest that has been charged, as I say, because of the Usury Act or the usury legislation that has since been, where it allows up to 25,000 rand loan, you can pay over 30% per annum. And so the question is that, well, how many of those loans, of the 9 million customers that they have, because the 9 million customers that they say they have are not payroll customers. Most of them, you find that they don't bank with Capitec, or their salary is not received with Capitec, but they borrow from Capitec and from a number of others. So,
but Capitec seems to have been at pains to try and explain and put their facts on the table and their arguments. You know, we saw the rebuttal that came from Capitec a few minutes ago. Is that enough, or is it up to investors now to, you know, people who have invested in the stock market of Capitec to make sure that the investment is protected? Or does Capitec need to say more, do more going forward to prove their point?
Well, Capitec has to do what it has to do. Their obligation of their managers and their board is to try and grow the company and to make sure that it's survive and viable. I do hope, as you were saying, that they do manage to continue attracting investors and savers, and that they do manage to continue lending money to the most vulnerable, needy people. I'm not so sure that they should lower the interest rates. Then they will be in trouble. Then they will go the way of African Bank and Sambo and Trust Bank and so on over the years. What they have to do is they have to match the interest rate to the risk, and if they don't do that correctly, they will either go under or they will be overtaken by competitors. That is how the market works and should work. So I would like to see the low-income, vulnerable people of South Africa have access to credit. In order to do that, they have to pay more than rich people pay. And in order to do that, Capitec has to survive, and it looks very much as if it will. It looks as if when you look at the graph in the next 5 months, 6 months, it'll be a little hiccup, a little downward blip, and then carrying on as it was before on a long, steady upward trajectory. That itself, let me say, is amazing. The size of the number of customers it has and clients and creditors it has is enormous. So one has to assume it's going to reach some sort of ceiling soon and plateau off. It can't carry on growing indefinitely unless the economy starts growing. But you're quite right, the economy is stagnant, and therefore there's a limited market. And I think any compassionate human being wants that market service. That's actually the objective of the National Credit Act. It says that its purpose is to bring credit to historically excluded and vulnerable people, and to make credit accessible to people who didn't previously have it. And micro-lenders do that, and that is why micro-lenders are lawful, and not only just lawful, but encouraged by the government to operate, because it wants to serve that needy consumer and small business and informal trader and so on.
Okay.
That's a market that must be served. Capitec does it, and to that extent we should all want Capitec to survive and continue prospering. And
that's precisely the point. I'll bring it to you, Mr. Hardiman, as we wrap up. You know, the customer base of Capitec growing and then perhaps being a target, you know, from competitors. Do you think this is what happened here?
Yeah, I have a serious reservation about the sustainability of the business model of Capitec. That is more consumer micro-lending focused than other business. For example, the question that must be asked, you know, the money that they are lending, exactly what is it being used for? Is a consumer debt to buy what goods? Goods that are not manufactured in this country, therefore not jobs that are created in this country. And so the knock-on effect on the economy is that much more. It's effectively, unfortunately, you know, adding on to our woes. So I'm not so sure that consumer is the way to go. I believe that the likes of Capitec needed to refocus their business model to look more at small, medium-sized lending. For example, if you look at the big gap that exists in the government, the state rather has got 1 trillion rand plus procurement budget a year. Capitec doesn't play any role in that regard, and for me, that would seem to be the type of a lending that's a lot more secure than this strictly consumer-led micro lending at rates where we see now increased default. And I think that the shareholders or the investors, I'm not so sure that they're going to be that much willing to lend the company, because the stock price might stabilize. But if Capitec was tomorrow to go and raise new money, will it be able to raise the money? Viceroy, of course, is also raising an issue where there's a class action lawsuit against Capitec, where they say that, well, they might have to make a provision, a contingency of over 12 billion rand of the various fees that they paid to originators. Because that is the other problem that they have, that new business, as they write, the question is that it comes at what cost? It will appear that they are inducing some of the intermediaries to be able to write new business into Capitec. They have to address those issues.
Absolutely, gentlemen. We'll have to leave it there in the interest of time. Thank you so much for your insight. I certainly appreciate it. Joining me in studio there, Lowe, from Free Market Foundation. That's a Hardiman political analyst. And you at home for joining in the conversation. Certainly appreciate it.